Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 170, recorded here on June 15th, 2025. This podcast is for entertainment only and is not investing advice. Do your own homework. All right, we are at block height 901380, Moscow time 946. Fees are 1, 1, and 1. So if you've got some UTXO consolidation to do, now might be a good time. We'll jump into the market news update and outlook, then we'll get into the weekly top Bitcoin news. We'll talk about this week's featured post on the Bitcoin Fortress Substack. Take a little look ahead at the Bitcoin Fortress Substack backlog of articles and wrap it up. So with that, let's get into it. Wall Street on Friday plummeted, giving up all its gains for the week and ending in the red. The decline was almost single-handedly due to a sharp escalation between Israel and Iran, with both countries trading missile strikes and stoking concerns of an all-out war in the Middle East. No! Oil prices spiked over supply worries while traders flocked to traditional safe haven asset gold. Aside from geopolitics, the week's spotlight was on some key inflation data and further trade developments with China. U.S. President Donald Trump on Wednesday declared that a deal with China was done, subject to final approval from him and the Asian nation's leader, Xi Jinping. The terms include China providing rare earths to the U.S., a factor that has been a wrangling point in negotiations before. Sounds like China had some leverage there. The main consumer price index and producer price index reports were published this week. Both sets of readings came in softer than anticipated, and coupled with signs of cooling in the labor market, led traders to raise their Federal Reserve rate cut expectations. Boeing was also in the news. One of the U.S. plane makers, Dreamliner Jets, was involved in a crash in India on Thursday that left hundreds dead. Crashed right into the building. It's amazing the building didn't fall down. Hmm. The building didn't fall down. They must make really good brick buildings there in India. For the week, the S&P 500 slipped 0.4%, while the tech-heavy Nasdaq Composite shed 0.6%. The blue chip Dow fell 1.3%. Looking ahead, Wall Street will have a busy week ahead, with market participants keeping a close eye on the escalating conflict between Israel and Iran and any further trade developments. Meanwhile, traders will also see a Federal Reserve monetary policy decision, or no decision, maybe, and a busy economic calendar. Over the weekend, Israel said it was striking military targets in Tehran and advised Iranians to evacuate weapons factories. Iran also launched more missiles against Israel. Oil prices will be on watch, and so will gold. The Fed will deliver its fourth interest rate decision of the year on Wednesday, and the Monetary Policy Committee is widely expected to leave the key policy rate unchanged. The spotlight will be on its updated economic projections, the first since the Liberation Day tariffs and Chairman Jerome Powell's press conference. In terms of economic data, the May U.S. retail sales report is due on Tuesday. Housing starts and building permits are on the docket on Wednesday. Jumping into Bitcoin news here. First up is the Hodler's Digest from Cointelegraph for the week June 8th through the 14th. We'll try to skip the shitcoinery and get to the good stuff. Cryptocurrency entrepreneur Anthony Pompliano is reportedly in talks to launch a new Bitcoin buying vehicle that will seek to raise $750 million. Pompliano is expected to become CEO of ProCap BTC, a special purpose acquisition company that is set to merge with the publicly traded blank check vehicle Columbus Circle Capital One, the Financial Times reported on Friday. Under Pompliano's leadership, which is still under discussion, ProCap BTC would seek to raise $500 million in equity and $250 million in convertible debt as part of a merger with Columbus Circle Capital One, backed by the Cohen and Company investment bank. Bitcoin has tumbled closer to the psychologically important $100,000 price level, dashing traders' hopes of a new all-time high after Israel launched a series of airstrikes on Iran. Explosions reportedly rocked Iran's capital of Tehran at 2250 UTC on Thursday, before Israel claimed responsibility for the attacks, which saw Bitcoin drop 2.8% from 106,042 to 103,053 within 90 minutes, before slightly recovering to 104,370 at the time of publication, according to CoinMarketCap. Drop caught traders offsides, with approximately 427.84 million in long positions liquidated over the past 24 hours, according to CoinGlass data. Just days earlier, on Tuesday, Bitcoin had climbed as high as 110,265, just below its May 22nd all-time high of 111,940. And leverage traders get wrecked. Stay humble, stack sats. The United States Securities and Exchange Commission has rescinded a slate of rules the agency proposed under the Biden administration, including two relating to crypto custody and exchanges. The SEC said on Thursday that it was withdrawing certain notices of proposed rulemaking that were issued between March 2022 and November 2023 under former chair Gary Gensler. The agency added that it does not intend to issue final rules with respect to these proposals, and new rules will be proposed should it change its stance in future regulatory action. It's President Donald Trump's latest regulatory rollback, which has promised sweeping deregulation of crypto and traditional markets. Let's see. Bullish, the digital asset exchange backed by billionaire investor Peter Thiel, has filed confidential paperwork with the U.S. Securities and Exchange Commission for an initial public offering, according to sources cited by the Financial Times. American investment bank Jefferies has been tapped as the lead underwriter for the offering, per the report. Bullish has not issued a public statement on its plans. The move positions Bullish among a wave of crypto companies looking to capitalize on renewed investor enthusiasm and a friendlier regulatory tone under U.S. President Donald Trump. Of course, if they don't codify that in the law, then the next administration will wipe it all away. Bye bye. Let's see. Top prediction of the week. Bitcoin is generally not regarded as a reliable investment during periods of geopolitical uncertainty, particularly when oil prices spike in response to escalating global tensions. However, historical data suggests that such moments often present compelling buying opportunities for traders prepared to capitalize on market dislocations. In the face of imminent conflict or instability, investors typically rotate into short-term government debt and cash, favoring safety over volatility. Nevertheless, Bitcoin has historically outperformed in the week following abrupt oil price surges, such as the recent rally to $77 per barrel on Friday. Authorities in Russia's Republic of Buryatia have uncovered an illegal cryptocurrency mining operation hidden inside a Kamaz truck, siphoning electricity meant for a nearby village. Discovered during a routine power line inspection in the Pribilavsky district, the unauthorized setup was drawing electricity from a 10 kilovolt line, enough to supply a small village, according to Russian state-owned news agency TASS. Inside the truck, inspectors found 95 mining rigs and a mobile transformer station. Two individuals believed to be connected to the operation fled the scene in an SUV before police arrived. Crypto analysts are skeptical of veteran trader Peter Brandt's recent speculation on X that Bitcoin could repeat its 2022 pattern and correct by 75%. Never say never. It just feels very unlikely at the moment, SwiftDex lead analyst Pav Hundal told Cointelegraph. It comes after Brandt's recent speculative post on X questioning whether Bitcoin's price action will mirror the severe decline in 2022. In November 2021, Bitcoin hit an all-time high of $69,000, only to drop by around 76% over the next 12 months, reaching approximately 16,195 by November 22, according to CoinMarketCap data. Is Bitcoin following its 2022 script and setting up for a 75% correction? Doesn't hurt to ask this, does it? Brant said in an X post on Tuesday. And if it does, you'll just get to acquire some cheap sats. French police have reportedly made more arrests in the abduction of a crypto entrepreneur's father whose finger was severed as part of the ransom demands. The state-owned media outlet France 24 reported on Wednesday that police have arrested several people suspected of involvement in the kidnapping, citing a source close to the case. There's been a growing number of crypto kidnappings in 2025, several of them in France, leading to crypto entrepreneurs beefing up their security measures and French Interior Minister Bruno Retailleau calling a meeting to discuss the issue. A couple other headlines here. Older investors are risking everything for a crypto-funded retirement. Oh, China threatened by U.S. stablecoins, G7 urged to tackle Lazarus Group, according to the Asia Express. And by the way, there's links to these in the article, which I'll include links to all the articles in the show notes. Uh, Jack Butcher's no fan of NFT royalties. You're getting paid on churn, NFT creator. People still doing NFTs, I guess. All right, moving on. We have from Cointelegraph. This article was posted today. Vietnam legalizes crypto under new digital technology law. The National Assembly of Vietnam approved the law on digital technology industry on June 14th, bringing digital assets under regulatory oversight. The legislation, set to take effect on January 1st, 2026, recognizes crypto assets and lays the groundwork for broader digital innovation across the country, according to reports from local media outlets. The law classifies digital assets into two categories, including virtual assets and crypto assets. While both rely on encryption or digital technologies for validation and transfer, neither includes includes securities, digital fiat currencies, or other financial instruments. The government is now tasked with outlining specific business conditions, classifications, and oversight mechanisms for these asset types. The law also mandates cybersecurity and anti-money laundering safeguards aligned with international norms, an effort likely aimed at addressing the Financial Action Task Force's concerns. Vietnam has been on the FATF gray list since 2023. Beyond crypto, the legislation signals Vietnam's ambition to become a digital tech hub. It introduces sweeping incentives for enterprises working in AI, semiconductors, and digital infrastructure. These include tax breaks, land use benefits, and R&D support, particularly for firms building core technologies like chip design and AI data centers. Regional governments are directed to support workforce development through subsidies and training programs, while education policies will integrate digital tech skills into national curricula. With this move, Vietnam has become the first country in the world to enact a standalone law specifically dedicated to digital technology industry, the Vietnamese government said. In February 2025, Vietnamese police arrested four individuals behind a fake crypto mining platform, BitMiner, which posed as a Dubai-based operation. The scam tricked over 200 victims out of more than 4 billion Vietnamese dong, or $157,300, by selling bogus mining packages and educational materials. In another major incident in December 2024, the Hanoi City Police Department in Vietnam prevented 300 potential victims from investing in an elaborate crypto scam that had already defrauded 30 billion Vietnamese dong, or $1.17 million, from about 100 businesses and 400 individuals. Dubbed Million Smiles, the company promoted an in-house cryptocurrency QFS or quantum financial system using deceptive advertising that linked it to ancestral treasures and spiritual claims. Wow, that's interesting. Okay, moving on. This also from Cointelegraph. This article was updated today. Bitcoin-backed loans open the real estate market to crypto-rich, tax-free. Bitcoin holders leverage crypto-backed loans to buy real estate without selling a single sat while sidestepping capital gains taxes. The emerging trend is gaining momentum among early crypto adopters, entrepreneurs, and high net worth individuals who are Bitcoin wealthy, but often don't meet the traditional criteria for real estate financing. Mauricio Di Bartolomeo, co-founder of Ledn, told Cointelegraph. Bitcoin-backed lending models allow borrowers to leverage their crypto without divesting. Since taking a loan doesn't typically count as taxable event, clients can access liquidity while retaining upside exposure. Borrowing using your Bitcoin as collateral doesn't typically trigger capital gains taxes in most jurisdictions because borrowing against an asset is typically not a taxable event. You are not selling your Bitcoin, Di Bartolomeo said. To secure a Bitcoin loan, clients lock up Bitcoin at a typical 50% loan to value ratio and receive fiat or stablecoins. The average funding time for one lender is 9.6 hours, Bartolomeo said. These funds are then used either as a down payment or to cover the entire cost of a property. The model also offers some flexibility. Interest and fees accrue over the loan term with no mandatory monthly payments. Repayment can occur anytime without penalties, and loans can be renewed if the LTV remains under 60%. Borrowers also retain the right to withdraw excess collateral if Bitcoin appreciates during the loan term. Di Bartolomeo said that Ledn's Bitcoin loans have found strong adoption in Latin America, the US, and parts of Europe. The beauty of Bitcoin as collateral is that it's borderless, he said. A recurring concern with BTC-backed loans is volatility. As Bitcoin price drops and the LTV increases, clients will receive notifications to send additional collateral, Di Bartolomeo explained. If the LTV reaches 80%, the lender sells the necessary amount of BTC to repay the loan, returning any remainder to the borrower. Since the real estate transaction has already occurred, a liquidation doesn't reverse the property purchase, it simply settles the loan. Traditional lenders often shy away from crypto due to regulatory uncertainty and credit risk. However, Di Bartolomeo said Bitcoin loans can bypass the need for credit scores entirely. Borrowers post 2-to-1 collateral, and lenders can liquidate instantly if the value falls. We believe Bitcoin is the world's most pristine collateral. It trades 24/7, it is deeply liquid, and transactions can be sent globally in real time, Di Bartolomeo noted. Ledn issued over 300 million in retail loans in the first quarter of 2025, is on pace to exceed $1 billion by year's end, the firm said. Furthermore, in 2024, clients earned 8 times more from Bitcoin's appreciation than they paid in interest, with over 1,000 Bitcoin withdrawn as excess collateral when prices climbed. Di Bartolomeo added that more and more high net worth individuals are turning to Bitcoin backed loans rather than cashing out. They're leveraging their BTC holdings to access hard assets like real estate, maintaining exposure to what they view as their best performing investment. In May, Seamus Roca, CEO of the Gibraltar based private bank Xapo Bank, said Bitcoin holders are becoming more comfortable borrowing against their crypto as market confidence grows. On March 18th, Xapo Bank launched a lending product that allows users to borrow US dollars using their Bitcoin as collateral. With the product, qualified clients can access up to $1 million in loans while keeping their Bitcoin. Bitcoin backed loans. The time is now. Next up from Decrypt, June 15th is when this, so it's today. Why is BlackRock's IBIT Bitcoin ETF soaring? After missing a couple of beats in late May and early June, BlackRock's iShares Bitcoin Exchange Traded Fund, ticker symbol IBIT, returned to its previous searing form last week, totaling about 1.1 billion in net investments. The fund has been one of the great investment success stories, cracking 70 billion in assets under management in just 341 days, faster than any of the thousands of funds in the ETF industry's 32-year history. IBIT's popularity reflects not only of the 11.6 trillion asset management giant's brand strength, but also the growing embrace by once crypto-shy investment advisors and other institutions. The fact that you have advisors and institutions adopting it, crypto ETFs, this quickly is a good sign, Bloomberg senior ETF analyst Eric Balchunas told Decrypt. These are bigger fish that don't bite quickly. Usually it takes years for them to get interested in ETF because it means liquidity. These are some of the hardest investors to attract. Balchunas added, advisors and institutions, they're just more sophisticated. A Bloomberg intelligence report earlier this month found that investment advisors filing 13F reports to the United States Securities and Exchange Commission hold about 20% of the spot Bitcoin ETF shares, roughly 21 billion of the asset. And Balchunas says the percentage is likely to double in the next year. Advisors' holdings in the asset, which have grown dramatically, rank number one by a mile, with hedge fund managers and brokerages falling in behind, Balchunas noted in a June 9th X post. Balchunas said that roughly 1,213 F filers held IBIT shares. That's insane, he told Decrypt. The growth has come as the Trump administration has loosened regulation and introduced more crypto-friendly policies, sparking sizable price gains in Bitcoin and major altcoins. Bitcoin was recently trading near $105,000, a 12% gain year to date that has far outstripped equity indexes and most other risk-on assets, a reality not lost on investors whose appetite for digital assets and products based on them has mushroomed. Financial advisor interest in crypto ETFs as a result has heated up. A study of financial advisors released in January by crypto focused asset manager Bitwise and financial services data provider Vetify found that nearly 1 in 5 advisors were planning to allocate crypto to investor accounts in 2025, double the percentage in the previous year, and that nearly all of the 400 advisors surveyed said they'd received a question about crypto over that period. Rick Edelman, a longtime financial advisor and founder of the Digital Assets Council of Financial Professionals, a trade group, told Decrypt that the friendlier political environment for digital assets and advisors' determination to learn more about them are behind the trend. Can't recommend something you don't know anything about, Edelman said. Advisors are racing to increase their knowledge so they can provide reasonable advice to the client that's in the client's best interest. Simultaneously, firms recognize that this is a huge opportunity to increase their AUM because clients are going to buy Bitcoin. And if they're not going to be able to buy from the firm, they're going to go buy it from somewhere else. At a conference last week, Edelman called for advisors to allot a minimum of 10% of digital assets for cautious portfolios and as much as 40% for more enterprising accounts, a departure from traditional 60-40 splits in stocks and bonds, and an increase from his previous recommendation that investors should allocate single digits to crypto. The allocation model you're familiar with, stocks and bonds, must now be replaced by one featuring stocks, crypto, and bonds, Edelman told an audience of independent financial advisors at the Vision event in Arlington, Texas. Edelman told Decrypt that IBIT's ranking for AUM well atop the other 10 funds in the spot Bitcoin category stems from brand recognition. When institutional investors engage for the first time, it is the path of least resistance for approval by the board and the C-suite, he said. If you're going to engage in an investment in a new asset class that most have limited experience or knowledge about, you can diffuse some of the concerns by choosing one of the best known brands, and that's BlackRock. BlackRock is the beneficiary of its brand. ETF.com senior analyst Sumit Roy also expects the momentum of crypto funds to grow as investors seek exposure to digital assets without the risk and responsibility of holding them directly. More adventurous investors have been able to get exposure through crypto trading platforms like Coinbase and OTC vehicles like GBTC prior to its ETF conversion for a long time, Roy said. Advisors and institutions have been much slower to adopt crypto given the risks and lack of regulatory protections. Now, with regulated ETFs, he added, those professionals are entering the space, and I'd expect them to continue to march slowly into these funds. Next up from Crypto Potato. This article was posted today as well. How U.S. firms and small businesses are increasing crypto adoption, according to Coinbase Research. It has been over a decade and a half since Bitcoin and blockchain technologies emerged. However, the cryptocurrency sector has witnessed more widespread adoption than ever before over the past year. According to the State of Crypto 2025 report from the digital asset exchange Coinbase's research team, small business operations and real world use cases like payroll and remittances from institutional investors have been driving stablecoin growth. Coinbase conducted surveys for small and medium businesses and institutional investors in April and January 2025, respectively, for the report. The exchange found that claimed ownership of crypto is more common than people think. A rising number of institutions are working on blockchain initiatives and have included such plans in their corporate strategies. 6 in 10 executives of Fortune 500 companies said their firms are building on chain initiatives. Roughly 47% of respondents reported that their companies have increased their investment in blockchain technology. Also, the number of on chain projects per company has risen 67% year on year from 5.8 to 9.7. The top types of on chain initiatives seen among the F500 include payment settlements, cross border transfers, supply chain management, corporate treasury, and blockchain infrastructure. Coinbase found that 17 unique on chain initiatives were announced by Fortune 100 companies last quarter and 46 between Q3 24 and Q1 25. There's also increased diversity from financial service and technology companies to auto and transportation, retail, food and beverage, and healthcare firms. Examining SMBs, Coinbase found that 34% of such businesses currently use crypto. 46% of those who do not are likely to start within the next 3 years. Also, 82% of SMBs believe crypto can address some of their financial pain points. 2025 has been a triple double for crypto among SMBs, Coinbase stated, adding that the number of SMBs using crypto and stablecoins has doubled year over year. This increased crypto adoption has driven stablecoin transfer volumes to unprecedented levels. The sector witnessed its two highest monthly organic transfer volumes in December 2024, $719 billion, and April 2025, $717.1 billion. Since 2019, the number of people holding stablecoins has grown to over 160 million. Stablecoin holders have surpassed the population of the 10 largest cities in the world combined and exceed the 142 million combined users of the US Big Four mobile banking apps. Meanwhile, Coinbase highlighted the role regulatory clarity could play in the full realization of crypto's potential. 9 in 10 Fortune 500 executives agree with the exchange, as well as 72% of SMBs. Next up from Bitcoin Magazine, thought this sounded interesting. This was posted on June 13th. This is the 30,000-foot view of the Oslo Freedom Forum. As I step onto the plane leaving Gardermoen Airport in Oslo, Norway, the weight and warmth of the past week settles into my chest. The Oslo Freedom Forum is not a conference, it's not a summit. It's something harder to name and even harder to describe, a convergence of courage, truth, and defiance that burns through the noise of the modern world and gives you no choice but to listen, feel, and act. For the second time, I leave the city more convinced than ever that something unstoppable is rising. That amid the censorship, surveillance, and state repression spreading across the globe. There is a countervailing force rooted in humanity, accelerated by technology, and led by those who've already paid the price for speaking out. The forum doesn't trade in empty optimism, it delivers a different kind of hope, forged from lived experience and stitched together by people who have been in the dark and still choose to see light. A hope born from the stories of individuals who have lived through the worst an authoritarian regime can do and still choose to fight for the freedom of others. The experiences shared were hard, at times devastating, but they weren't offered for pity, they were calls to action. Just days after she was abducted, blindfolded, tortured, and sexually assaulted in a Tanzanian prison cell, Agatha Atuhaire stood in front of a crowd of strangers and told her story. Her voice did not tremble. The Ugandan journalist and lawyer had traveled to Tanzania in solidarity with fellow East African dissidents, only to be disappeared in a black van alongside Kenyan activist Boniface Mwangi. And yet, against all odds, she came back, not just to her home in Uganda, but also to the stage in Oslo, where she spoke calmly and clearly about what it means to tell the truth under a dictatorship. Her presentation, The Digital Free Speech Crackdown in Uganda, laid bare the authoritarian playbook: social media blackouts, propaganda campaigns, surveillance of journalists, and the slow financial asphyxiation of independent media. When the government doesn't like a story, it simply blocks the platform or website. When a journalist digs too deep, they disappear for a while or forever. Atu Hari painted a picture of many struggle to even imagine. And yet, after everything, she didn't just recount these struggles. She looked out at the crowd and thanked the open source builders and contributors who write code and create tools that make it possible for activists like her to speak, move money, and organize under regimes that want them silenced or worse. From Iran, independent Bitcoin educator Zia Sadr reminded us that financial privacy is not a luxury, but a necessary lifeline for those facing the financial repression by oppressive rulers. Sadr's detainment during the 2022 Women Life Freedom Movement, following the murder of Masa Amini by the Iranian regime, is a testament to that. Without financial privacy, activist actions, connections, and finances are exposed to a regime equipped with widespread financial controls and a sophisticated, restrictive internet firewall that rivals even China's. The result is one of the most repressive digital environments in the world. And if that wasn't enough, the Iranian rial currency has lost more than 80% of its value in just a few years. Against this backdrop, Iranians are using Bitcoin as undebasable savings and to buy digital services like VPNs in order to access the open internet. But even that act, just reaching the outside world, requires a level of privacy most of us take for granted. In his presentation, Securing Lifelines, the Bitcoin Privacy Imperative, Sadr shared that many Iranians turn to Bitcoin coin joins, a privacy technique that breaks the link between Bitcoin transaction inputs. Coin joins preserve user transaction privacy and, more importantly, shield Iranians from the surveillance and retaliation of a regime who punishes anyone trying to access information beyond its tightly controlled digital spaces. The use of coin joins is becoming more difficult as global legal pressure mounts against open source developers, and in the aftermath of the Samurai developer arrests, privacy protocols like Whirlpool are unworkable. Today, Sadr is learning more about additional Bitcoin privacy tools, including PayJoin, a privacy method that allows two users to contribute an input to a Bitcoin transaction. PayJoin breaks common chain analysis heuristics and conceals the sender and receiver of a transaction as well as the payment amount. Then there is eCash, a form of digital cash backed by Bitcoin that enables very private, everyday payments with the custodial trade-off of trusting mints, entities that issue and redeem eCash tokens to store user funds. The continued development of these protocols is crucial for Iranians who live under a government that not only tracks and surveils digital behavior, but also imposes automatic fines on women for violating hijab rules and manipulates currency exchange rates to profit off citizens' savings. For millions in Iran, Bitcoin offers a last line of defense against a collapsing currency, intrusive surveillance, and total financial repression. Venezuelan opposition leader Leopoldo Lopez took the stage at the 2025 Oslo Freedom Forum, not as a politician, but as a witness to what happens when a state turns its institutions into further tendrils of its repression machine. After Nicolas Maduro stole Venezuela's 2024 elections, Lopez watched thousands of his fellow people, activists, students, journalists, opposition members, and lawyers get arrested, disappeared, or forced into exile. The regime blocked access to social media, revoked passports, criminalized dissent, and used the financial system as a means of controlling the population. Amid this digital repression and Venezuela's 162% inflation rate, Lopez sees Bitcoin, decentralized money, and Nostr, decentralized social media, as lifelines. When dictators shut down the internet or freeze your bank account, alternatives that are open source, decentralized, uncensorable, and accessible become more important than ever for the survival of democracy and freedom. For decades, Paraguay's greatest natural resource, hydroelectric power, has flowed out of the country through international contracts, fueling development in neighboring countries like Brazil and Argentina, while 1 in 4 Paraguayans remain trapped in poverty. Paraguay's Itaipu Dam, one of the largest in the world, has long symbolized this paradox, a river of energy diverted away from the very people who need it the most. In a landmark move, they secured Born Schmidtke and Delia Garcetti of Penguin Group are flipping that script. In a landmark move, they secured Paraguay's first 100 megawatt power purchase agreement, marking the beginning of a bold experiment to reclaim that energy for the people of Paraguay. Instead of selling it off to foreign powers, they use it to mine Bitcoin, and the proceeds go to Paraguay's youth. Out of the heat of humming ASICs and the roar of the Itaipu turbines rises Penguin Academy, a free software development school that equips young Paraguayans with coding, development, and technical skills. Over 10,000 students have applied, including 800 women. More than 3,000 have already graduated, and over 85% of the graduates from their Code Pro program now work in the tech industry. What was once wasted or exported is now being transformed into freedom and a future through Bitcoin. Paraguay's stranded energy is finding its way home. Rushan Abbas is a Uyghur activist who has spent years raising the alarm about the Chinese Communist Party's campaign to erase her people. During the Freedom Tech track, she spoke not just as a human rights advocate, but as a sister whose sibling, Dr. Gulshan Abbas, was abducted by the CCP in 2018 and hasn't been heard from since. Her voice was calm, but her words were heavy. Abbas described a region turned into a digital and physical prison. The Uyghur homeland, East Turkestan, has been intentionally transformed into one of the world's most sophisticated police states, where mass surveillance, facial recognition systems, police checkpoints, asset seizure, arranged marriage, sterilization, and forced labor are used not just to control the Uyghur population, but to suppress them out of existence. As Rusha describes it, break their lineage, break their roots, break their connections, and break their origins. Rusha made clear that monetary control is central to the CCP's strategy. Uyghurs have their assets and bank accounts frozen, their land seized, and their homes stolen. They are stripped of any ability to save, transact, or build generational wealth and are forced into government run labor schemes under the guise of poverty alleviation. Rushin reminds us that what's happening to the Uyghurs is not abstract. It's targeted, systematic erasure carried out with weaponized technology and financial repression. Her sister's disappearance is one of millions of silenced lives, but she refuses to let it be forgotten. In Oslo, Rushin stood not just as a witness, but her words served as a warning. When a government can monitor every transaction, surveil every citizen, and control every movement, it doesn't just repress, but entirely dismantles the foundations of a people's identity, autonomy, and future. For these reasons and more, you don't leave the Oslo Freedom Forum feeling defeated. You leave reminded that truth is more powerful than propaganda, that code can protect life, and that resistance isn't just possible, it's already happening. And if you're fortunate enough to live in a place where speaking freely or moving money isn't a life risking act, you're reminded of the privilege that comes with that freedom and the responsibility you have to stand with those who are still fighting for it. This year, I felt a noticeable pulse of momentum around freedom tech. As we saw above, human rights defenders and dissidents didn't just talk about the repression they endured, they emphasized the optimism about the tools that help them peacefully fight back: Bitcoin, Nostr, privacy tools, open source AI models, uncensorable VPNs, tools that work in the shadows, beneath firewalls, around embargoes, and beyond borders, tools that build a parallel system where the right to transact, communicate, organize, and resist cannot be revoked at the press of a button. These are the instruments keeping movements alive, getting money to dissidents, and protecting voices at risk. And behind every tool is a quiet builder, a pseudonymous creator, contributor, or an open source developer who may never take the stage, but is just as much a part of their story. The Oslo Freedom Forum is not just a gathering of voices, it's a front line, a place where the future is crafted by those who refuse to give in. And what emerges from that convergence is a simple, undeniable truth. Authoritarianism adapts, but so do we. With Bitcoin, with open source tools, with decentralized networks, with unstoppable courage. At 30,000 feet, well above the noise and borders they try to enforce, one thing is clear. No authoritarian regime, no matter how brutal or well funded, has ever succeeded in stamping out the human desire to be free. The Oslo Freedom Forum is proof of that, and if you're paying attention, it's also a glimpse into what comes next. This isn't the end, it's just the beginning, the next chapter, once written not by the powerful, but by the free. Onward. All right. And then last but not least, from bitcoinnews.com, this was posted on June 10th. Bitcoin core devs to remove data carrier limit despite criticism. Bitcoin Core GitHub page announced yesterday that core developers have merged pull request 32406, removing support for data carrier argument for Bitcoin Core software into their next release expected to be published in October. This is the latest development regarding the initiative brought forth by Bitcoin Core developer Peter Todd, which has caused intense debate among Bitcoiners now known as the spam wars. The disagreement is over a change to Bitcoin Core's transaction relay policy that removes the op return data limit, which some see as a threat to Bitcoin's very purpose, while others see it as a necessary step to preserve decentralization and censorship resistance. Op return is an arbitrary piece of data that can be amended to a Bitcoin transaction and used to be limited to 80 bytes. Users have found ways to go around this limit already and have uploaded larger data to the Bitcoin blockchain, including photos, audio, and even entire computer games. Bitcoin Core allows for extra arguments when running the application, one of which is the data carrier argument, which tells the application to not accept transactions, including larger op return data, into its mempool. Now, this argument is marked as deprecated, meaning it is not supported or developed anymore and is expected to be completely removed in future versions. This will make accepting Bitcoin transactions that contain non financial data mandatory for anyone running future versions of the core software. Prior to the merging of the mentioned pull request on the morning of Monday, June 9th, a joint statement from 31 Bitcoin devs was released on June 6th, reheating the already controversial debate in the Bitcoin community. In the June 6th statement, Bitcoin core devs explained how they think Bitcoin nodes should handle transactions that include non financial data like digital art or messages. This type of data has become more common with ordinals and inscriptions. Core developers said they are not endorsing non financial use of Bitcoin, but also won't stop it. Their main point is that Bitcoin's strength is in being open and censorship resistant. They wrote, "This is not endorsing or condoning non financial data usage, but accepting that as a censorship resistant system, Bitcoin can and will be used for use cases not everyone agrees on." They say it's up to users and node operators to decide what kind of Bitcoin software they run. Bitcoin Core won't block transactions that have economic demand and will be mined. Being free to run any software is the network's primary safeguard against coercion, the statement added. The policy change goes back to a May 8th upgrade announced by core contributor and engineer at Blockstream, Greg Sanders, where devs removed the long-standing 80 byte limit on op return output size. This limit was meant to discourage non-payment data usage, but devs say it no longer serves that purpose. Retiring a deterrent that no longer deters makes sense, they argue, because people have already found ways to add large data to the blockchain. They also point out that removing the cap may help miners and users more than it hurts. They claim the new approach helps predict which transactions will be mined, speeds up block propagation, and helps miners find fee-paying transactions. Knowingly refusing to relay transactions that miners would include in blocks anyway forces users into alternate communication channels, they explained, warning this could harm decentralization. The response has been mixed. The announcement of the merge received 64 upvotes and 93 downvotes from reviewers, showing the community is mostly against this action. Comments explaining their dissatisfaction with the merge also received the support of the majority. Reviewers who voted ACK, acknowledgement and agreement, were downvoted, and comments voting NACK, disagreement, received more upvotes. Critics say It opens the door to blockchain spam, higher fees, and more bloat in the blockchain with non-financial content. They say Bitcoin should stick to its original purpose as a peer-to-peer electronic cash system. Samson Mao, CEO of Jan3, was one of the most vocal critics. He said the devs are removing the barriers that protect the network from spam. Bitcoin core devs have been changing the network gradually to enable spam, Mao said. It's disingenuous to just say, it is what it is now, too bad. Bitcoin dev Luke Dasher also criticized the move, saying it undermines Bitcoin's core function. He said the dev's goals basically all wrong and said expecting spam to be mined is defeatism. One user said it's Bitcoin, not Bitbucket or BitStore or whatever general purpose data store you have in mind. It's a peer-to-peer electronic cash system. Another user chimed in, warning it could increase costs, reduce efficiency, and even hurt long-term scalability. Their argument is simple. If non-financial data is allowed to be stored on the blockchain, it will increase its size over time, storing useless data, and will hurt decentralization, as fewer individuals will be able to host the entire blockchain on their computers. They argue allowing people to store whatever they want on the blockchain because transactions shouldn't be censored will lead to hurting Bitcoin in the long run. Many even argue no additional information should be allowed in the blockchain at all, but not everyone is unhappy. Some, like Jameson Lopp, co-founder of Bitcoin wallet provider Casa, praised the devs for being transparent and consistent. Core devs are a group saying we can't force anyone to run code they don't like, Lopp said. Here is our thinking on relay policy and network health. Lopp believes a joint statement helps the public understand what the devs stand for. Supporters also say in a truly decentralized system, devs shouldn't be gatekeepers. Instead, users and miners should be able to decide what goes on the blockchain. With opinions so divided, the future of Bitcoin may be more contentious. Some predict a fork or to create a version of Bitcoin that only deals with monetary use. Others expect new wallet and node software that lets users choose to filter out large data or allow it. Despite the controversy, the devs are standing by their decision. While we recognize that this view isn't held universally, they said it is our sincere belief that it is in the best interest of Bitcoin and its users. So I'm sure we haven't heard the last of that one. Next, wanted to highlight this week's featured post on the Bitcoin Fortress Substack. The article is entitled Stay Humble, Stack Sats, the deeper meaning behind Bitcoin's most enduring motto. So check that out. I will include a link to that in the show notes. And let's take a quick look ahead at the Bitcoin Fortress Substack articles coming up. So next up, 21 creative and responsible ways to stack more Bitcoin. That should be interesting. Bitcoin estate planning strategies, Bitcoin private key management, 21 ways to wealth, Michael Saylor's masterclass on Bitcoin prosperity, the hardest part to grasp, Bitcoin's growth trajectory, when liberty worked, real world case studies in freedom and prosperity, and finally, are we near the edge? So that's what's coming up on the Bitcoin Fortress. And with that, I will thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so that you don't miss an episode. You can also follow my Substack. It's at bitcoinfortress.substack.com, and you can follow me on Nostr. My NPub is in the show notes. And with that, I will talk to y'all next week. Bye bye.